Hello and welcome to Smart Karma's corporate webinar. I'm Sanam Nanwani from Smart Karma. This week we are hosting Audience Analytics. We are glad to have with us Chairman and Managing Director Datuk William Ng. We will start the webinar with Datuk William walking us through a company presentation, after which he will engage in a fireside chat with Smartkarma Insight Provider Angus Mackintosh. We are taking live Q&A, so I would like to request our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, we will also share some links on how you can connect with Audience Analytics, as well as read more research by Angus. So please do keep a lookout for messages in the chat box. I now hand it over to Datuk William to walk us through a short company presentation. Datuk William, please.
All right, thank you very much for the quick introduction. And hello, everyone, and thank you for being part of this seminar this afternoon. As you have heard, my name is William Ng, and I'm the founder and chairman of Audience Analytics Limited. If you can recall, my partner, Ryan Wu, and myself, we started this business 20 years ago to really find ways to help other businesses do well. And I think over the years, we have developed various brands and services that have today become leaders in their respective swim lanes. I'm going to share a few slides in my presentation to give everyone a good understanding of what we do. So this is the first slide. As you can see, all the brands that we have are displayed in this slide. We take example, the HR Asia Best Companies to Work For in Asia. We are now in 15 markets, and we attract participation from over 2,000 companies each year, and it's far ahead of any of our competitors and the rest of the market. The same is true with the rest of the brands that you see on the screen now, which are well recognized in the respective industries and various business segments. So in essence, we are a collection of very strong B2B brands in 3 business segments, all designed to help businesses at every stage of their growth. And on top of that, we're also sitting on a database of over half a million business owners and decision makers across Asia. So we're looking at doing business in Asia, and your target audience is B2B. More likely than not, you'll be hearing from one of our salespeople to be part of one of our many brands that you see on the screen today. I'm going to talk about 3 segments that we're in: the business impact assessment and recognition segment, the exhibition segment, as well as the business media segment. So the first one, the business impact assessment and recognition segment, is our largest segment. Essentially what we do is that we organize business awards across 15 markets in Asia. It's a assessment as well because we deploy assessment tools as part of the awards judging mechanism. Some of these are the brands that we currently have. The one I was talking about is the first on the top left. That's the HR Asia Best Companies to Work For in Asia. And then to its right, you see the other brands that we have: the SME 100, the Golden Bull Award, as well as CXP Customer Experience Awards. These are only 4 products that we have launched. There are a few more products that we have in the pipeline that we're waiting for the right time to essentially launch them across all the 15 markets that we are in. What you would notice is that at the bottom, for the HR Asia Best Companies to Work For in Asia, we're in 15 markets, from Cambodia, China, all the way to Japan and the UAE. Whereas on the extreme right, you will see CXP in 3 markets. What this means is that there's a strong possibility that we're able to roll out the 3 awards that are slightly less mature than HR Asia Best Companies to Work For in Asia, from the 3, 4, and 5 markets that we're currently in to eventually reach the 15 markets that HR Asia is in. So plenty of runway there for each of our existing products under this particular segment. These are some of the history of how we started and the growth in terms of market. So the flags represent the markets that we are in. These are some of the clients that are using our business assessment. Yeah, our business impact assessment and recognition products. We don't just attract SMEs. 100 out of 500 Fortune 500 companies uses our services. So there's 20% of all the Fortune 500 companies already using our companies and making headway every day as we speak into new clients, both large corporates as well as SMEs. And just last year, 2 things happened to us. One, we acquired the IP right outright for one of the awards, that's the Golden Bull Award. A bit of history about the Golden Bull Award. It was historically owned by 2 newspapers. Initially, it was the Nanyang Nanyang Sangpao in Malaysia before being acquired by the SPH Singapore Press Holdings Group in Singapore about 7 or 8 years ago. We partnered with them to grow the awards, and last year we bought it outright to give us the ability to then expand into even more markets than we previously could. Same thing this year. We started negotiating on this last year. We just signed an agreement with the Age Singapore to be an official media partner for Golden Bull Award in Singapore. So what we're trying to say is that with every award brand that we have today, we're deepening the coverage. We're pushing them even harder so that every brand will deliver more for the company. Our second business segment, the second largest, is the exhibition segment, which is also performing very well. We organize career fairs, education fairs in Malaysia primarily. You must understand that during the pandemic, this segment was hit quite badly. But despite that, we did okay. We turned some of the exhibition into virtual. Exhibitors were so loyal because the brand is very strong. People still came despite it being a virtual fair. And of course, last year onwards, we managed to now go back into physical. So we can foresee that this segment will be stronger moving forward. So these are some of the numbers of exhibitions we held over the past few years for comparison purpose. Pre-pandemic, we were at 3 exhibitions. And then in 2020, at the take of the pandemic, we had 2 physical and 2 virtual. 2021, a slight recovery. 2022, we had 2 physical events. This year, 2023, based on the first event that we had in February last month, response has been overwhelming. So we can foresee another strong year for the exhibition segment for audience analytics. Right. The third segment is our business media segment. This is the smallest segment, but also the most strategic. This forms the base from where we organize our exhibition and organizes our business awards. So this is a business media segment. We own 7 B2B business titles, starting off with SME, and then we launched Asia. We have the Capital Asia, which targets the Chinese-speaking business segment across Asia. We have the CXP Asia, that targets the customer experience professionals. We have Energy Asia, Truth Asia, as well as Logistics Asia. Very trade-centric titles, and we're introducing new ones. These are not just B2B digital titles. Some, for example, the SME and the Capital Asia are also physical magazine that we push through bookstores and other retail channels across Asia. And during the pandemic, something very interesting happened to us. We started monetizing our content through syndication that we have now done it prior to the pandemic. We did it during the pandemic, and I think that explained why our business media segment, despite being very small, remained profitable, remained sustainable throughout the pandemic. All right, so that was a quick brief on what we do as a company. Again, to recap, we're a company of 20 over brands in 3 segments: in business awards, in B2B media, as well as in exhibition, all targeting B2B clients. And I think because of the strength of the brand and the geographic breadth of what we do, 15 markets and growing, we have delivered very strong results over the past few years. In fact, if you look at the nature of what we do, a lot of people think that the pandemic will probably kill us because it sounds like it's very sensitive to the pandemic and borders closure. But it proved otherwise, that despite the pandemic, we grew year on year. So we're quite happy that we have just recently announced our 2022 numbers. Again, another record breaking year for us across every metrics. Our revenue has climbed by 43.1% versus 2021. Our net profit jumped by 35.2%. Our free cash flow jumped 88%. And because of that, we have also declared our highest ever dividend in the history of the company. That jumped by 42.9%. Our net cash per share as of end of last year is 36.6%, meaning that for every dollar that you invest or in the share, more than 1/3 of that is actually backed by cash. I think that's better than some currencies that we can think of. Here's the growth. On a CAGR basis, we climbed 18.4% over 5 years. I do not take the FY 2022 as a base because there's a pandemic year. Had I taken the FY 2020 as the base year, the CAGR will be closer to 30% over the past 3 years. In fact, we already we knew that we're going to be growing quite nicely as far back as 2018, 2017. But the pandemic hit us a little bit, so you see a slight decrease in revenue, but recovered quite strongly, as you can see from the chart. So our strongest segment, as I've said before, is the business impact assessment and recognition, but all other segments did very well last year as well. So we are seeing an increase in revenue, better business across every segment. All right, gross profit and gross profit margin has also held quite steadily. We see a slight decline simply because as the economy reopened, the borders reopen, we see some cost adjustment across all vendors. For example, we are quite heavily reliant on venues, hotels, exhibition centers, convention centers, and almost everybody increased their price. Salaries has increased a fair bit as well, not just internally, but across our vendors and suppliers. And that explained the slight decrease in gross profit margin. In fact, I'm quite proud that we have held on to the profit margin, and this speaks volumes about the strength of our brand and our ability to essentially keep and manage our clients. I think what I want to say here is really that we are a fixed cost business. So you see that the bulk of every project goes into certain cost elements such as venue, and essentially everything above that. And as we become bigger, everything above that fixed cost is just pure profit. So we're seeing a dividend from that business model. As revenue grow, our gross profit margin theoretically should have grown if not for that cost adjustment that we see post-pandemic. So we are hopeful that moving forward, we'll be able to maintain, if not improve upon a gross profit margin. Ditto with the net profit margin on the right-hand side. So go on. Again, this is something that we are quite happy and proud of, the fact that we continue to be able to give out dividend, while our dividend policy over the past 2 years has been just 50%. We exceeded our own estimate each year, 2021 and 2022. This year, we are giving out 1.8 cents, per share back to shareholders. All right, very strong balance sheet, as you can see. We'll bring your attention to the net cash that we have. Again, that's increasing year on year. I'll skip through the free cash flow generation because that's already explained the balance sheet. And our growth plan. So 3 legs. The first one is really to expand to the markets we're not in. I spoke earlier about how some of the awards are only in 3 markets, where the strongest one is 15 markets. So it's just a matter of increasing the number of markets that the other awards are in. Cross-selling our brands to clients of different brands and deeper penetration into existing markets. I like to think that we are far from saturation. If you look at our SME 100 awards in Malaysia, for example, very clearly we give out 100 awards each year, and we have got several hundreds of people who won the award, but we only limit to 100. So there are some investors who ask me, they say, look, will you ever run out of SME to give out the award too? So my short answer is no, simply because in Malaysia, for example, we have 120,000 new SMEs coming into the market every year. 120,000 new SMEs each year out of 1 million that we currently have. We only need 100 each year. So in terms of a percentage of the total addressable market size, we are probably 0.001% and we really have no worry about saturation anytime now or in the near future. So our job really now is to just ensure that we capture even more of that. Right. So to cap the briefing, these are some of the investment merits. With a portfolio of complementary products targeting the B2B market. We're an asset-light business. I don't need to build plants or factories if I want to expand to a new market, say Japan, for example. I just need to ensure that I've got the right people to run the programs in those markets. We have an attractive valuation. Even today, I think as we speak, because of the strong results that delivered, the past 1 week, we saw a lot of interest from investors. The price has probably climbed 20% in the past 1.5 weeks. But despite that, we are still highly attractive, both on a PE basis as well as on an ex-cash PE basis. Strong cash flow generation. So I've always like to tell our employees, During the pandemic, I told them, I said, don't overly worry about your employment because we have enough cash to pay everyone's salary for the next 5 years, even if we do not have any revenue at all. And I think that's quite reassuring, both for our own employees and our team members, as well as investors. And last but not least, the major shareholders, that's myself and Ryan, our interests are aligned with minority investors. This is our only business. This is the bulk of our income. And we will definitely ensure that the business will continue to do well and that we continue to pay dividend as profit comes in. All right, so that wraps up my quick presentation. Thank you.
Datuk, thank you very much for that very, very sort of clear presentation, and you also got a pretty impressive list of clients who you're providing services to. Just to take a step back, just to give the audience a little bit more perspective on how the company came about in the first place. I mean, what was the real philosophy and drive for you to set up the company in the first place with your fellow founder?
Right. Actually, 20 years ago, I started off the business as an exhibition company. And unfortunately for us, I think a year or two after we have done that, SARS came about, if you remember, the flu. And it hit us quite badly. Exhibitors were not very willing to stand in an exhibition environment and be exposed to the virus. So people pull out and we struggle. And personally, myself and Ryan, we have to sell properties, cars, and whatever not, just to ensure that the company went along. And it was that moment we realized two things. One, we cannot rely on just one business. It has to be a range of businesses that complement one another. That's when we started our awards as well as our magazine and business media business. And secondly, we also realized another lesson from the pandemic, and that is we absolutely need to continue building our brands. No ifs and buts about it. So a lot of our effort over the past 20 years is about building our brand so that we don't have to rely as much on a single client, and that we'll be more resilient in case something like SARS happen again. And it happened again, like last 2 years, right, with the pandemic. And that has proven us right that with a strong brand, we can continue to attract clients and continue to be profitable. I know this is not exactly what you're asking, but I hope I'm answering that in some way. Yeah.
No, that's great. I mean, that gives a very clear picture, actually. So you started off, producing, large scale exhibitions for different industries, and you've then moved into the area of business impact assessment and recognition, because that's not immediately a kind of clear for people who don't understand the industry. It's not necessarily clear how from that business do you actually is it in effect a consultancy business? And how are you generating revenue? Because that's now the largest segment in the company's sort of business, isn't it?
It's a combination of all the things that you mentioned. I don't think that we more or less single-handedly, if you didn't create the industry, you probably innovated the whole industry. When we came into the industry, the business impact assessment and recognition business, you have a few awards that are organized by the government and a few media publishers, and they're done very randomly. And we came in to professionalize the whole process. We make awards a lot more desirable than it was in the past, and we ensure that every step of what we do are well audited and well authenticated. So there's no element that you can buy the award. There's no element that is random. Everything is research driven, data driven. So we put a lot of processes into that part of the business. And because of that, we have a very strong suite of assessment tools that we previously used to assess suitability of awards of companies for awards. For example, in the HR Asia Best Companies to Work For in Asia, we have this tool called TEAM for Tutor Engagement Assessment Model that we deploy each year to over 1 million employees across Asia. So these employees are the ones who decide through their assessment and through the response to the surveys whether these companies should be a HR Asia Best Companies to Work For or not. So that was meant to be a assessment tool to determine the award winner. And because it has become so successful, we have companies who came to us and say, look, can we buy into those assessments? Can we take your assessment tool, deploy it across our company, and understand real time what they think about us as an employer. And we say yes to that. So that in a way generated incremental revenue for us. And it went from being just a tool to assess an award to become an assessment tool itself, if that makes sense. And that is true across the other awards. So we have assessment tools for each award that is now being deployed. Hence, we call it business impact assessment and recognition, because it is not, it goes beyond an award. It's an assessment product as well.
Right. So I guess that's like a 360-degree, assessment type of process, which other people have taken from you and used themselves internally.
Right.
So just sort of take an example of one award. Say the biggest one was the HR Asia Awards. I mean, each company pays a fee every year, do they, to be part of that? And so to generate more revenue, you basically have to bring on more companies into the awards process. Is that correct? I mean, is that the right way to look at it?
So what we've done is we've revamped the entire model of how awards work. And in our case, and this is something that many of our clients are very appreciative of, is this: we no longer do awards, so we no longer put awards as a product by itself. We break it into two. One, we deliver the assessment tools. So we charges companies to use the assessment tool that I was talking about. So in the case of HR Asia, so we have a client, one of the ones that you saw on the screen earlier. If you want to be part of the program, they need to pay a certain amount so that the employees can make use of the assessment model, assessment tools, and assess the companies. And the HR director, the CEO, whoever is given access would have real-time visibility of what the employees think of them, as well as the keywords, etc. That is, so they don't need to know the exact, but the metrics and the numbers are all there. So that's useful. And once they're determined to be among the best in the market, we have a suite of products that includes publicity, includes recognition, etc., that these companies can buy into, and that is the bulk of the revenue. Say, for example, somebody is determined to be the winner of the award. We'll tell them, look, we're going to work on an employer branding plan for them to help them reinforces their positioning as a good employer. So that's where we make our money.
Right, and I guess to some is there some kind of sponsorship for the award ceremonies as well? Can people sort of put themselves up as a sponsor for each awards?
We don't do that. We don't do that because
I guess it's too much vested interest. If people do that, they might expect to win.
We can't have you your logo on the stage and then you become the winner. That's a conflict.
So it's effectively using you charge the companies for you to do the assessment on that company, and then they can take part in the award ceremony. And do all the companies within the awards process, are those the voters on who wins? So is that where does the voting base come from?
That's from the assessment tool. So it's very transparent.
So the awards are there's no actual voting in the award ceremony. So the awards come from your assessment of all the companies within the particular sector.
Yeah, or if you see it from that perspective, the employees are the one who are voting. If it makes sense.
So that's
so they'll score the companies based on this series of questions that we ask them. So essentially, they're the one who would who should be the best employees in this case. Yes.
Right, and just to move away from HR, because HR is obviously very clear, isn't it? Because the employees are voting. But the other awards which you're hosting, how does that work? Is it, who are the people deciding on?
We are probably the first to be very data driven as an award. I know there are a couple of competitors and newspapers and government agencies that are trying to adopt the same methodology, but until very recently, most awards work on the basis of judging by a panel of judges. Say the one is organized by the government department. They say, look, I employ these 15 judges, and they'll sit in a room for a day, mark papers, and decide who wins the award. So that's traditionally how it is done. So we came out and said we want to change the entire system. It's just not fair that somebody who might possibly be a competitor to one of the candidates be in the panel. So the whole thing has to be data driven. So in markets like Malaysia, we partner with the largest data provider in the market, CTOS. In Singapore, we partner with Credit Bureau Asia. So we obtain the data on the companies, pre-validated, validated data, and we rank them based on a basket of quantitative and qualitative criteria that we share with our auditors. So on top of the data being generated or being given to us and we rank them, we also get an audit to ensure that, look, that weightage that we have set, that we said we'll put, as well as the ranking witnessed by the auditors, and then we rank them based on the data that is available from these data providers. So
right. So
yeah.
So then I guess, you know, the data that's generated through, you know, through the whole process is very valuable to the companies participating, given that they get to compare themselves to others within the same segment, so they can see where they're falling short.
Yeah, you're very quick, and you're absolutely right, Angus. And that's the value that a lot of people see. With Asia, for example, it is not just about understanding your employees, because that's important, but also the comparative data. For example, we have started doing this 4 years ago. We give companies comparative data across market and across industry. Say I'm a bank and I took this survey, and your result might mean something to you. If you compared it previously, it might mean something to you. But what if I can give you data of what other banks are doing in terms of employee engagement across different markets, across not just Singapore, but in Hong Kong, in Japan, and so on? Would it be valuable to you? And almost everybody say, yes, absolutely. You can benchmark, and we know where we're doing. And that's exactly what we have been doing over the past 4 years. So we deliver that benchmark to businesses, and they truly appreciate it.
And I mean, I guess, you know, each year, presumably that sort of list of questions and areas that you cover might change as industries change and you know, as priorities change for those industries. Is that right? I mean, you know, obviously it's not the same every year. It probably develops over time, does it not?
Right. So we randomize the questions to ensure transparency and better accuracy. We also update the questions from year to year. Yeah.
Okay. Very interesting. And does it? I mean, I guess it applies. I mean, you've got a very impressive, you know, quite broad range of sectors that you cover. In effect, I mean, is other industries which are more suitable, you know, for this whole process, and other industries where it doesn't suit? I mean, is it more kind of HR focused, or, you know, if you just give us an idea of that'd be great. If you have any industry.
The process and the know-how that we've developed industry agnostic. Obviously, when we go into a specific industry, it takes time. We don't just go, for example, now we're developing the customer experience industry as an award. And it takes time for both acceptance by industry, as well as for our own people to understand industry better. So while it's industry agnostic, it also takes time for us to expand into new vertical. But the plan definitely is to expand to more industry verticals beyond the one that we currently have.
Right, that's very interesting. And can you expand, you know, into other areas of consulting as a broad term? You know, it rather than just, you know, a one-off every annual. Could it be something which is more of an ongoing process with those underlying customers?
We absolutely can expand into adjacent businesses that tap into the database and the client pool and the relationship that we have with these clients over the many years. We definitely can expand into other offerings, but we look at the business from a very brand perspective, i.e., we want to focus on developing products that we fully own, that we can then monetize not just this year, but for many more years to come. So consulting, unfortunately, may or may not fall under that criteria. So it's not a business that we can productize and replicate across market and across multiple geography and industries. Very labor intensive. So while we can consider consulting, but it's not something that would be very high up in our list of businesses to expand into. Right.
Let's perhaps move on to you know, the exhibitions business, because I mean, obviously, you know, the exhibition business, which as you mentioned in your introduction, you know, during COVID, it must have been very difficult. But you know, you had the loyalty of I mean, companies still need to operate and want to show what they're doing and what they're selling or whatever it is. So and in your case, a lot of it is careers based. So it's looking to recruit new employees and so on. I mean, how do you see that developing as a business? I mean, you're doing sort of two to three exhibitions a year. Is that something which is very scalable, do you think?
I think number one, some of this exhibition, because it's a career fair, is a very good barometer of the state of the economy. So when the economy is doing very well like it is now, obviously there'll be more people trying to hire. And when the economy doesn't do as well, you will see the less hiring activity. But one thing that is good with owning a brand like the MCTF, PGF, and so on that has been around for 20 over years is this. It has gone from being just a platform for hiring to becoming a brand on its own. People and companies want to be associated with the exhibition. We have exhibitors and clients who come in not because they want to hire, but because they want to be seen by prospective employees that might work for them 5 years down the road. So for them, it's just purely an employer branding and a brand exercise. So there's something that I think is unique to our products because of the longevity of the brand. So whether or not it can scale within the markets that we're operating in, within Malaysia, for example, with the career fair is, clearly we can do more than just twice that we're currently doing. So it's just a matter of resources, whether I want to put in more resources into this segment or I have better use for those resources in expanding the business elsewhere. But to expand beyond this vertical, i.e. the career vertical to other verticals, say a travel fair or industry fair, would not be impossible. It's possible because the know-how and the processes and the people are already in place. Again, it's just a matter of priorities and what do we want to do.
Right, and would you look to? I mean, you see, the fairs are currently in Malaysia. Would you look to expand to other geographies with that business?
We can. In fact, we have got inquiries every other month or so from partners, clients to do this in other markets. So it's not something that I would totally rule out, but it would not be in this year's plan.
And is there, I mean, just in terms of, returns, I mean, is it a bit more of a CapEx heavy exercise putting on exhibitions, or is it a higher cost base? And then obviously then you probably have a fixed cost base like everything else. And then you'll as you increase the numbers of people, then profitability improves.
Yeah, you're absolutely right. And that's not just for the exhibition segment, that's also true for the business impact assessment segment, right? Fixed costs and then you scale it up.
Yeah.
So yeah, the margin is very strong. But why the preference or why the business impact assessment segment has outgrown or grown faster than the exhibition segment is simply because, unlike the exhibition segment where you lock in your money into an exhibition venue at a specific date, with the awards you can just do it whenever you want. So there's a beautiful thing about that business model. You control not just a game, you also control the goalposts, right? So if you can't score a penalty, you just move the goalpost a bit nearer to you. Right. And that's basically what we're doing with the first segment.
Yeah, I mean, I guess the whole rewards process will probably end with a physical, awards ceremony, will it not?
Right.
And sort of the charging structure for both of those businesses. I mean, how does that work? Just to be clear again, on the exhibition business, exhibitors will presumably pay a fixed fee, or will there be different sort of levels of fees for different positions and size of stand and all that kind of thing?
So for the exhibition business, unlike the award business, we do accept sponsorship because there's no conflict in a sense. So they can come in a bigger booth, we call them a sponsor. So there are different tiers of payment depending on where you want to be, how big the size of the exhibition space that you're taking. We have discounts for loyalty, for repeat clients, for quantity, how many booths you're taking, etc. So charges differ from client to client.
Right. So you mentioned, the sort of going sort of back a step, just the way how you can scale up your largest business, the business impact assessment business, and that's effectively just by expanding into different markets. I mean, how what has your experience with expanding into other markets been like so far? Is it a relatively simple process to do that? I mean,
yeah, I mean, it looks easy on paper, right? Because I've shown you charts and how to grow, but in reality, it's very painful. It's a very, very painful process. It's just like any other business. Language is a serious barrier. Local culture is a serious barrier. You absolutely have to take time to understand them. What you don't see in our financial statement breakdowns, and I'm going to break it down for you today. But what you don't see are breakdowns of new markets, existing markets, and markets that we're planning to go into. Obviously, the markets where we are already well established, the margin is a lot stronger. We have gone past the break-even point many years ago, and we're just reaping in the reward of our investment in early years. But there are also markets that are very new to us, both in terms of product as well as geography, that we're investing into them, simply because even a product like an awards or an exhibition, it will take generally a year or two before the gestation period is over and we start seeing profit. So while we are reaping the reward of the early investment, we are also reinvesting back into newer markets and newer products to ensure that this profitability can be sustained moving forward.
Right, and the awards sort of the awards business. I mean, you moved into you want to basically put all 15 awards into across 7 markets, and that would be the aim. Right. But that will take some time to execute, I guess.
No, we understand the market already. For example, we are in South Korea with the Malaysia Asia business in. It was a very painful process. We sent 9 people to Korean classes for 6 months just to be able to, and a lot of people doesn't know this, right? So a lot of effort put in. But now that we are in, now that we understand the market be better, we have got clients in the market, we've got partners in the market. The issue to then do the other awards in the market, is just a matter of assigning resources. Our biggest challenge is really execution. Are we able to get enough talents? Are we able to get enough people to roll out those projects in all the other markets that we're talking about? Because we're an asset-like model. We absolutely don't need to build a plan. We just go in as and when we are ready. So the readiness here is just the people.
Right, and that's obviously, I mean, like, as you mentioned, I mean, areas like sort of language and I guess local culture in some cases, trying to understand how things work. That must be quite something to deal with. Right. We've actually got I've got a couple of questions that have come in here, which I think might just slot in now, from Gerard Ahot. And first question is, what are the cost items under cost of sales? Does it include the sales team's salaries and bonuses? And how do you incentivize a sales team? And what are the challenges to increase the sales force and retain the best salespeople? So that's very much around people.
All right. So I'm generalizing. So this might not be accurate, but I'm generalizing. The salaries, incentives, bonuses, commission of salespeople go into the cost of sales, not expenses. So expenses is everything else, right? The marketing staff and whatnot. So that's a quick answer to the first part of the question. Do we incentivize our salespeople? Absolutely. We are very much a sales-driven organization. About half of our team members are involved in sales, either directly or indirectly. So not only do we have commission for individual sales, we also have incentives for overall profitability of the project. And to inculcate teamwork, we also have what we call a jackpot. So if a certain project hit a certain target, we ensure that not only the sales team, but everyone else in the company benefit from those success. So in short, I think the entire team, not just sales teams, are very focused and ensuring not only do we deliver in terms of sales, but also deliver in terms of experience and satisfaction, so the sales can keep coming in year after year. I'm not sure.
Sounds good. I mean, obviously that I think is very clear. That he had a second question, which is how many salespeople were there at the end of 2022, And how many more do you need this year to support the growth?
Our head count is about 80 end of 2022, again, give and take. So about half of that are our sales team. I would love to double that so that we can immediately more than double our revenue. But it's not a clear-cut answer. It doesn't break down into, oh, I need X number of people for each market. It doesn't work that way. We work in clusters. So technically, a cluster of salespeople can go to multiple markets, given the right tool and depending on the size of the market and the familiarity of those markets. But to summarize, I think what I'm trying to say here is that yes, you're absolutely correct. The number of not just the salespeople, but the product development, the designers, the creatives, the operations crew, the logistics, and so on are also important in order for us to expand beyond the market that we're in. But absolutely, salespeople is one of the people that we're trying very hard to groom and train and build upon.
Yeah, I mean, it's obviously very sort of people centric business in that sense, because in the end, it's how many new participants you can bring on, in any one year for any one particular exhibition or awards, which is driving the revenue growth, is it not?
Right.
Well, Gerard said thank you very much for the replies. So that's I think we've answered the questions. You've answered the questions very well. Just to move on briefly, just to the media business, which is very interesting because obviously you have a number of different sort of trade publications and so on. I mean, it's a very small portion of sales, but as you mentioned earlier, it's a very important part of the whole process. Maybe you want to talk a little bit more detail about that and whether it can get any bigger for that matter.
Yeah. I'm personally very passionate about the business media segment. I think it's absolutely essential for businesses to continue having the intelligence via such trade publications, media, etc. Our challenge really is grooming the correct writers and content people. You will know that, right? So it's very difficult, very, very difficult. And I always tell my PR agency and my IR team, I say, don't steal my stuff, right? If you groom somebody who can write and understand how business work, don't take them away from us. But we're also quite happy that we're able to monetize via the Dow Jones platform some of our content. So we sell our content through the Dow Jones platform to users and readers and investors globally. And we're seeing month on month very strong growth from that content aggregation and content sale. And we're going to continue on that. It's not going to be making us a lot of money, but very importantly, it's a profitable business on its own.
Right, and so just to remind how many publications you have at the moment, was it 8?
We now have 7 titles, and we
7 titles. Sorry,
a lot more.
Yeah. And you would look to add more titles to your kind of portfolio.
Yes, we are. We're absolutely right. So in my mind, if we can't build them on our own, we're also actively sourcing for titles that we can perhaps buy if they are in the right industries or right vertical that we're interested in.
Very interesting. Yes. No. I mean, obviously, I do know something about that. Publishing on Smartkarma. Very interesting. And just to kind of moving forward. I mean, what do you? I mean, you have mentioned some of the growth drivers previously. But maybe you want to quickly reinforce some of the main drivers you see of growth in the coming year and in the coming, say, 3 years. Because a lot of investors not just looking at this year, they're looking at well beyond that. Some of them have very long-term time scales. So and will invest in companies quite early in order to take advantage of that future growth.
Yeah, I think a lot of people misunderstood us and think that we are very much a sales business, i.e., you get a client, you sell them something, and off you go year after year. In truth, over the past 20 years, it's all about brand building to get to where we are today. And that enables us to really monetize what we're doing. And because of the discipline and we have a very strong product and marketing team to do exactly that. And because of the discipline in brand building, we're able to command a premium over our competitor We survived the pandemic primarily on that, right? When people chose to work with only one brand, and we are that brand, and that's why we survive. And all competitors, many of them fell. And to me, because of the strong brand that we have, there's several levers that we can continue to pull moving forward. One, we can increase the price, and we have done that gently over the past couple of years in some markets, and almost zero resistance from clients at this point in time, because the people still feel that we are underpricing our offering based on the brand that we have. So there's one. Secondly, of course, is increase the number of participants in our program. We have been self-limiting the number of participants so as to remain an aspirational brand, very much like Rolls-Royce and the rest. You purposely create a wait list so that people, so they become more desirable. So we're doing exactly that. So we're limiting the number of people who participate and who win awards and who are part of our program. So we limit that on purpose. We can, if you want to, loosen up that requirement from time to time, so we can be an LV. I hope I don't get sued for this. So we can be one of the brand. We just sort of print a few more bags and put in the market, and then it comes. But we try not to do that. But that's one lever that we can push. And we can do that purely because we own 100% of every brand that you see earlier on in the presentation today, and they're all very strong brands. So the driver really is how fast and how far can we take what we have and push it into the markets that we want to be in. So we think that we have perfected the business model. We've perfected the processes. We have the right people in-house to do all that. So it's just now a matter of how fast we execute. Right.
And in terms of execution, I mean, would you highlight any particular markets that for this year that you're particularly focusing on as new geographies?
I won't say which market we are focusing on, because I don't know how many competitors are in this.
Okay.
But the two markets that I'm personally very excited about, one is Indonesia. I think Indonesia is absolutely the key to Southeast Asia. We're really very strong in Southeast Asia. We started off in Malaysia. We're listed in Singapore. We have an office in Thailand. Our footprint is all over Southeast Asia. So we're very strong in Southeast Asia. But I think Indonesia is absolutely key. We don't think we are in the market deep enough. We want to go very deep into the provinces. We just want to unearth the whole market if we can, right? So that's one. I think it's crucial. I think Indonesia is booming. We want to be part of that boom. Another market that we're going to be focusing a lot on, if not this year, but is China. We are planning to sign a new partnership in China. We're not disclosing that because obviously that has to go through the usual disclosure process before we do so. But I'm putting quite a fair bit of our resources in China. A lot of what we're doing in China are really the MNCs, the multinationals, and the companies with HQ out of China. We're not doing enough work for local China enterprises beyond, say, the top 50 or top 100 of the local players. So there are plenty of room to go far deeper than where we are in China. Right. So yeah, so there you go.
No, man, that's very interesting. I mean, there's two obviously massive markets to drive potential growth. There is another question here, which I'll just slot in. We're running a bit short on time, but we've got time for this one question. It's from an anonymous attendee. Audience has posted strong results through the years and has a strong balance sheet. It seems quite unlikely that it requires capital raising in the near future. One, does the SGX listing help Audience in other ways? And two, does Audience intend to address the lack of analyst coverage? Thanks in advance.
Right. So the answer to the second question, if there's any analysts in the room, please cover us. Right. So I think that I can't control what or who covers what, but I think speaking from internally, I think there are plenty of story we can tell that we're just not getting enough coverage, and we're working very hard for our IR agency on that part. And absolutely, I think having a presence as a listed company as SGX helped the company tremendously, especially in the East Asian market where brand is everything. In China and South Korea, I think it has helped us quite a fair bit. And I think that the continued listing in SGX will help audience in burnishing our brand and enhancing our reputation.
Well, Daddy, that's very clear and makes sense. I mean, I'm afraid I think we're just about coming to the end. Was there anything else that you would like to add yourself that you don't think we've touched on? We've got a minute or so.
Yeah, I think if you look at the 500,000 database that we have in our collection, plus the brands that we have, I'm seriously very excited with the runway that we have. I'm not even talking about acquisition. We are sitting on a pile of cash right now that we hope to deploy via acquisition, and we're actively looking at that. But just organically looking at the markets that we're already in, that for some products and not in for most products, I'm really very excited with the prospect of where we can get it organically over the next 5-10 years, right?
Very good. Well, thank you very much, Dato. It's been a great conversation and pretty enlightening about the company. I'm now going to hand back to Sanam for some closing remarks. Thank you very much.
Thank you very much, everyone.
Thank you.
Thank you, Angus, for some very interesting questions, and a big thanks to Datuk William for a detailed insight into audience analytics, the challenges in its sector, and opportunity for audience analytics. I would also like to thank our attendees who joined the session live. With that, I would like to wrap up this week's corporate webinar. Thank you again, everyone, and have a great week ahead. Thank you.